and get started. Obviously, hey, Michael. Obviously, this is recorded and we put it in the group chat. The group. I guess it's a group chat, right? Like our group. And that's really where everyone sees it. So when we take a look back at where we've been, so over the last week, we believed last week was going to have a very positive week. We believed plus 1,500. We could not have been more wrong. I think from the moment we said plus 1,500, I think it went down like 700-800 points, which is being wrong by 2,200 points, right? Like the 1,500 up and the 700-800 down, which is really, really bad. We went ahead and purchased Micron earnings. Well, actually, so we held them, right? And we purchased them and they've been just fine. Now, the earnings were terrible, and the stock went down drastically, but it's since recovered and everything is fine. What we've personally been doing is taking shots. So I don't want to go ahead and confuse that with gambling, but obviously when you bring in duration, by definition, it's gambling because I can't measure all the variables. With that being said, I've personally been using our algorithm to go ahead and measure stocks on a 2-hour interval rather than a daily interval, which produces many, 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 many more 17, 18, 20 red and green because it only has to do it over a 2-hour span rather than doing it over a daily span. So I got in and out of PayPal quite well. I got in and out of NVIDIA quite well. Right now I'm in FCX. And mind you, when I say all this, let me do something. Let me show you a share screen real quick. Let me show you a share screen really quick, right? Like I can't even say it. When we go ahead and do these positions, just because I don't, and again, I always say I'm never going to post that I do a day trade because day trades are inherently risky in the sense that, again, I can't measure all the variables that will happen overnight, but I do believe that it sets up in such a way that more times than not, I'm going to be successful. So what you'll see here is all the different times that's occurred over the last month. Basically more so towards this, right? 6-3 in and out, 6-6 to 6-8, 6-6 to 6-10, 6-14 to 6-15, 7-1 to 7-5, 6-30 to 7-1, 7-5, which is yesterday, and I would like to get out of this today, right? But that's out of my hands. That's in the hands of the market. I put in a 25% limit. So if I could just make 25% overnight, I'm happy. But the point is, everyone has this sheet, and I'll go ahead and post it in the group again. I'm never going to advertise that I'm making a move overnight because I do understand there's a certain monkey see, monkey do nature to humans, more so when it has to do with money. And I do not want to take on the responsibility of anyone losing money in something that I deem even risky for myself. Now, of course, I don't have any ability of what you do with your money, but at the same time, I do understand that there is an influence, even if by indirect, because I firmly tell you, I cannot give you advice. So that's that. So let's stop the share for a moment. And what are we looking at today? So I gotta say, when it comes to the market, and we've spoken about this, there is a saying, well, I guess it's not really a saying, it's what people say. Oh, when they were wrong for so long and then something eventually happened. Oh, it was just early, right? Like I wanted to buy ABC stock because I thought it was going to 50, but I bought it at 30 and it went down to 5 and then went to 50. Well, if that's the case, you were very early, right? You could have bought it at 5, or you bought it at 30. Now, eventually it did go to where you said it was going to go. So I guess everything is fine, but you were early. Here's the problem. When you buy it at 30 and it goes down to 5, are you early or wrong? Well, you don't know because you don't know if it goes to 50. That had not happened yet. Therefore, you cannot say you're early. You're simply wrong. In fact, you're very wrong. In fact, you're wrong to like almost 90% loss. That's how wrong you are. But you're ultimately going to be right. So in a moment that you are absolutely wrong and you do not know if you're going to be right, but you believe you're going to be right, how do you go ahead and stay so firm in your conviction while knowing that it could be signing your own suicide, right? Because if you're wrong, then you're clearly just wrong. And that's kind of how I feel right now about the market. I believe there's going to be a slingshot higher. I just believe it. Everything tells me it, except the price. When I hear every single, and I'm not just being exaggerate, right? Like every single financial news media person, reporter, is all now the smartest person in the world. You can talk to the 5 o'clock person on a Saturday show that's saying, yeah, we've been telling our clients to buy puts. We believe that the Fed is going to overshoot and it's going to be a recession and the credit markets are tightening up and this always precedes a larger move. We believe something very big is happening. Well, that sounds intelligent. The problem is that's only intelligent when one person is able to break away from the herd and shares that with you, like myself in 2008. And I'm not using myself as an example because I want to, like, Anthony's so great. No, it's just that's how I felt. Everyone was saying, oh my God, it's a new high, mortgage market, stock market. And I was like, no, you guys you don't get what this is doing to the system. The converse of that is when everyone's saying you don't get what it's doing to the system and you feel like you're the one breaking away by saying, no, I think you guys are missing it. There's so much money that dwarfs the system that you're referring to. The system that I'm referring to is the global debt market. The global debt market is the largest market in the world. The global debt market is dominoes. You cannot have the US blow up before everyone else. It can't happen. Everyone else will have to blow up before the US if you're going to make the argument that the debt market is a ticking time bomb, which I agree with. But the mechanism to go ahead and diffuse a ticking time bomb or to see it explode is that every other market has to blow up first because they're smaller. By the nature, say for instance, anyone with 10 billion in debt is going to blow up. Fine. How much debt do we have? 30 trillion. We're not going to blow up at the 10 billion mark because we have a $30 trillion debt market. Therefore, countries with 10 billion will blow up. Well, 20 billion will blow up. 30 billion will blow up. The point is, as that number raises, what do you think the people from those countries do? Do you think they just leave it in that market and say, oh, darn, we're the next domino. I can see it coming, but I'm going to sit here. No, they take their money and throw it to us because they say, hey, you guys are going to be the last man standing. Hopefully we fix this by the time it gets to you. Take my money. What happens when this country is the reservoir for everyone else's money? That's what people do not calculate. You see, when people calculate markets, they think it's linear. They do not understand the cyclicality of markets. One thing does not affect one thing. One thing affects everything. Therefore, you could say, well, Anthony, I see that the Fed is doing this, interest rates are this, debt is this, consumer spending is this, GDP is this, equals default. I don't disagree. But that's an economics class. Yeah, I graduated economics class. I know economics class very well. That was the 101 class where everyone got an A because everyone could do that calculation. What about the advanced economics? What about behavioral economics? When all of that equals the same thing it equals everywhere, and because everywhere knows what that equals, they take their money and throw it to here. How do you go ahead and calculate the overflow and the tidal wave of money from outside the world coming into the US? Does their equals still equal default? Maybe, but what's the duration between that and what's the activity before that? That's the point I'm trying to make. And when I take a look at money flow, I see that the money flow into equities is still at an all-time high. And that calculation is what people say, look, the market hasn't crashed yet. You haven't shaken out enough of people. Therefore, people are still in there. They need to lose money. Everyone needs to be washed out. And I appreciate that in a normal market. But you have to go ahead and take a look at the money flow and disintegrate it. What you'll find is that the money flow from foreign is at all-time high. The money flow from the consumer, the retail investor, is coming to an all-time low. Consumer sentiment coming to a very, very, not all-time, but a very, very low. The bull and bear surveys, all-time lows. So what you can say is, despite the retail investor of this country all getting shaken out, all being taken out of their positions, the money flow to stocks is still high. You then ask yourself, well, if that's still high, where's it coming from? Okay, the rest of the world. Then you have to ask yourself, when is that going to end? Can that last longer than the retail people in this country selling stocks? And can it last long enough that the people in this country say, It's just not going down anymore. I'm going to buy. And now all the people that did sell get in, and you have that massive slingshot higher. I think that's the case. But everything agrees with me except stock prices. So back to our original example. If I think something's going to 50 and I own it at 30 and it goes down to 5, I must ask myself a question. Am I early or am I wrong? And of course, I mean, you just saw the sheet. Let me just do that one more time. Because the way I speak makes it sound like I lost all my money. No. I understand that my overall thesis of that we're going to have a slingshot higher has been incorrect. But having an opinion on the markets and trading the markets is very different. Your opinion is supposed to color how you trade. As you can see, these are all calls except this, which was puts. Well, except that too, which was puts, but this was a hedge. But they were all calls, meaning our bias is to the upside. But we believe that the big move is still ahead of us. So if that were the case, and if the money is going to fly into the stock market, where would it go? I think oil is a good place. Because if you have that much money flying into the market, it's going to find its way into speculative stuff. In fact, I think Bitcoin is a good buy. I mean, that's the most speculative thing there is. If there's that much money flying into the US and we're going to have a slingshot higher, it's going to bring all things up with it. So go ahead and buy a Bitcoin. You know, you understand that we're doing Rhino coin, which is very different because it's actually backed by something. But I think we're going to have such a heyday in this country that Rhino coin is going to be probably the most valuable asset at one point. And I don't say that out of hyperbole. Those that are part of Rhino and Rhino Street understand where I'm coming from with that. But I think you can just buy anything. I think if you want to stay on the commodity side, that's good because the more money that comes into the country, the more activity, hence commodities go up because commodities are pricing in a recession. And I just don't think that's the case. Maybe we get like a recession by calculation, but with that much money coming into the US, I'm just not sure that that's the case. But you got to look at where the money's going. And I think a rising tide lifts all boats. Tech has been beaten up. These are very strong companies. In fact, if I was from a foreign country and I was sending money to the US, I'd probably send it to Apple. I'd probably send it to Google. I'd send it to companies that have pricing power, that are super large, super duper duper, and have great balance sheets, right? So do I believe Apple is a purchase? Yeah, of course. Not only is it a great company, but you got to understand something. When you look at Apple in a regular mindset, oh, okay, let's look at earnings and blah, blah, blah. Then sure, yeah, iPhone sales are going to be down, therefore the multiple contracts, fine. But is that what Apple is right now? If the argument is the money flow around the world is coming to the US because we have a debt bomb that's blowing up all over the place, then if you are foreign money, what are you looking for? To put it into something that has a great balance sheet. If your money is fleeing bad debt, where's it going to go? Good debt. Is there better debt in the entire really history of the world than Apple? Right? They have like $200 billion on their balance sheet. Their margins are 50 to 60% on all products. If you own an Apple product, you're going to continue buying an Apple product. They're in every single country. If you lent money to Apple, do you believe you'll get it back? I think so. If you lent money to the US government, do you think you're going to get back? Yeah, but, right? Like how much inflation is in that money? Well, Anthony, that's the same inflation with an Apple bond. They don't pay Apple dollars. I agree. So why wouldn't you buy Apple stock, right? So that's what we're talking about here. So I do think you could stay with the Dow Jones. I do think you could stay with these super uber large companies that have great balance sheets. I think if you could find one that's in tech, like Amazon or Apple or Google or Salesforce or things like that, I think they stand the best to move higher. So I guess my overall thesis is you can buy speculative if you want to ride up a money flow. But the safest thing would be to buy the large companies that are in beaten down sectors like Apple, like Facebook, like Google, like Amazon, like Salesforce. Even the video works. And NVIDIA just got beaten up pretty good, so that's not a bad idea right here. Microsoft. Tesla is interesting. Here's the thing with Tesla. Either it goes a lot lower than where it is now, or this is the low. That's the only two options. Because it's kind of sitting on a trend line, but it hasn't broke. And when that breaks, everyone expects Tesla to go back to the 400s. But if that doesn't break, I don't see why Tesla can't make new all-time highs. So Tesla, if you're feeling like a little risky, so if you had $10, maybe $3 to Apple, $3 to Google, no, $3 to Facebook, $3 to Apple, $3 to Google, and then like $1 to Tesla, right? Like something like that. Oh, nice. And of course, Ravi is already ahead of me. And I say that because Ravi's been with us a long time and I've seen the trades he makes, and it's no surprise to me that he had purchased something a day before. And when I see him say that, I feel more confident because I know how good he is at this. So we're gonna let you go with that. Just to give you a little bit of insight on the Rhino Street side. I'm working on so much data right now. Right now, I have a 41,000 contact sheet that I'm identifying names, last name, zip code, state, city, occupation, and company. Also, aggregating that sheet with all of the editors, publishers, and sales personnel of all the newspapers in this country. Also adding all of the mayors and city councils of our 420 cities that we're launching in. That needs to be done by the end of tonight, probably by, I don't know, by like 7, 8 a.m. tomorrow morning, because our first email from Salesforce is going out this week. That's where our commentary is going to be on. That will be going out to probably 55,000 people. And usually the commentary is something we hold for just our investors, but Rhino Street is coming and I want the world to know who we are. And I want to kind of open the curtain so they can see who we really are. It's not sales and marketing material. This is what the people that own Rhino know of Rhino. Therefore, we're inviting you to know Rhino as well. All of that's going to take a lot. Our forms and stuff for our sales force is still 5 to 7 weeks away, which I'll share more with you on the 2 o'clock call today, because today is Wednesday, which is completely baffling to me because I thought it was Tuesday, but 4th of July was Monday. And I can tell you that I'm quite a Grinch. I despise taking off for holidays because it makes me miss a day in the week. And anyone that knows me knows if I could, I would be in my office all day. In fact, you see all these computers, I have 2 more at my house on my kitchen table. So, and another couple in my office. So that's that. Just to go ahead and show you the sheet again before we go. And I'll go ahead, I want to take the link and give it to everyone. That's why I'm doing this. Let's see. I'm going into the chat right now, pulling it for everyone. Why do you do this to me? Why is things so difficult? Sorry. It's like I'm doing like surgery over here. All right, so that's to the ledger so you can see everything we're in. And what you'll see is FCX we're in right now. Actually, I didn't even think about it. Like, let's take a look at the market, see what's going on. All right. Oh, it's down 3%. That's annoying. Well, as you see it on a 2-hour bar, it's now at 21. So I bought it yesterday at a higher price, which means if you have the opportunity to buy it here, I would trade with you right now, which is a good thing if you were looking to buy it. So I like it here. I did have some other choices too. So Mosaic is 17 red and green. That looks good if you want to make a quick trade on that. Caterpillar, 18 only red. I was gonna buy this yesterday because it was 24. It's now 25. I mean, it's only up 95 cents. What's this? This made a high before. I probably could have got in and out. 21, red, no green. I was looking at Hess yesterday too, 17 red. Wow. And then this one was interesting. No, it was up here. So that's not a number anymore. So see you later. Bristol Myers was very interesting. Oh, that was the one I should have done. Darn it. Can't win them all. All right. And then Fang. So Fang is 17 red and green. Mosaic is 17 red and green. And I'm in Freeport, which is 21 red, no green. So you know what? Let's put that in the chat. If I had to rank them, I would say Mosaic, Cat, FCX. So good luck to everyone. If you take any of those, God bless. What I would suggest, I own options that expire next week. Since this is looking to get in and get out, I think you're safe with that. If you're really a cowboy and you want to buy Friday options of this week, God bless you. I think you're completely, I don't want to say crazy. I just think that you have, you know what I mean. But that's definitely win big, lose big if you buy this Friday's options. But those are definitely good choices. All right. I love everyone. I'll see you at 2 o'clock. Bye, guys.